You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. Hope your net worth is still intact, somewhat, mostly. All you got to do is just know when to get into the market and when to get out, how to sell high and buy low, not do the opposite, and you'll make it through this fine. We've got a financial expert with us now, Andrew Arons of Synergy Advisory Management Group, your partner there, Andrew. Just reminded when I see a market like this, what Eisenhower said, that things are more like they are now than they've ever been before. So what do you do when things are like they are now, Andrew?
I think you need to really just stay calm right now. The market is obviously very volatile. There's a lot of things going on in the market right now. But overall, long term, I really think the market's positive. I still think we're in a bull market here. I do think that the market will come back and we'll see some sort of a big retracement here by year end. And I'm one of the people on the street that is pretty bullish on the market.
All right. So at what point do you become a non-bull, a bear?
Well, I look at fundamentals and I also look at technicals. And right now, technically we're still in a bull market. And I think that there's a lot of things obviously going on. But I do think in the future, earnings look pretty good. And I think that we'll probably see a retracement. After we typically see a decline of over 25% in the NASDAQ, we usually see a retracement within 3 months of around 11%. And usually 6 months later, that's around 20%. So, I'm pretty bullish here. I think we're way oversold on the NASDAQ. The last time I was on your show, we were talking about, the difference between value stocks and growth stocks. This was a little over a year ago. And I saw a big rotation going into value. But right now, I think the rotation into value is overdone. And I think the sell-off in the NASDAQ and the overall market is overdone. Just a case in point, looking at a lot of growth stocks that have been selling off, a lot of money has been going into stocks that are like value stocks like Clorox and Coca-Cola. And these stocks are now trading at, in my opinion, very high PEs. You have Clorox trading at 37 times earnings and Coke trading at 27 times earnings. And then you have a stock like AMD selling at 20 times earnings. I think the market's a little confused here.
Okay. Well, hey, just remember that the market can stay irrational longer than you can stay solvent, right?
Right. I mean, you do have to be careful, but, there's been a lot of selling pressure with interest rates obviously going up, and we're having inflation right now. And there's a lot of things going on geopolitically right now. But still, earnings are what really drive the market. And, I think the earnings are bright for a lot of companies.
All right. So what about the ones it's not bright for?
Well, there are always companies that are not going to do well regardless. But, focusing in on the overall markets, a lot of the stocks that are in the S&P 500, they should be doing quite well, going forward. The earnings last quarter were pretty good.
All right. So, but the economy appears to be slowing down. Last quarter GDP minus 1.44%. Could be even worse if you take into account the understated inflation rate. So where does that leave us? Companies just keep raising profits and they keep going up?
Well, I mean, I don't know. We'll see what happens. I mean, I don't think that inflation is going to be out of hand for for a very long period of time here. I'm hoping, obviously, the Fed can get this under control. But when we look at inflation, a lot of the inflation is really from energy right now. So when you look at energy and you look at, new car sales and things like that, and you look at food, that's really where the majority of the inflation is right now, happening. So I think that, towards the end of the year, hopefully, things could straighten out here in the market. I do think we're oversold, and I think the markets are going to trend higher.
Okay. Well, it seems to be a prevailing view. As we say in life, everything is temporary. How much more bloodletting is there going to be? Do you think the market can go down lower than it is now?
I think, look, anything could obviously happen in the markets, but you're seeing consumer confidence at a really low point right now. And typically when you see that, it's usually a good buying opportunity. When we take a look at where we are technically, it looks like the NASDAQ's trying to hold 11,000 here. If it would breach 10,000, that could be a problem. It looks like, the Dow Jones Industrial Average is trying to hold here around 32,000. If that would breach 28,000, that could be a problem. But overall, the trend line still is bullish over the last 15 years.
So it's bullish, but what if I want to be defensive and still get bullish upside? How would I go about doing that?
Well, the problem is that a lot of money has now gone into some of these defensive stocks that look, in my opinion, a little expensive here. So I think there's some good opportunities in some of the tech sector that I think is sold off. And I'm talking about blue chip tech stocks, Apple, Intel. These look like stocks that look like they could go quite a bit higher.
All right. So Apple, all right. Right now it's trading under 150, 146 and change as we speak today on May 16th. Its PE ratio is down to 24. So that does that make Apple a screaming buy?
Well, I don't know if it would be a screaming buy, but it definitely would be a buy. Usually when Apple sells off about 20% off the high, usually it's a good time to buy. Now, when I recommend buying, I don't recommend taking a full position, but I definitely think that if you don't have a position in Apple right now, it wouldn't be a bad time to start one.
How about Google? Google is only trading at 21 times earnings.
Yeah, I think a lot of these big name tech stocks, like I said, are a good purchase right here.
Facebook has gotten totally decimated. I know because my daughter works there, and all of a sudden her employee stock ownership plan, her vesting, all of a sudden retirement just got a lot further off, and she's young too.
Don't just survive, thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper-gold early-stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita copper-gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Right. I mean, look, Facebook, Meta platforms, these stocks are, risky assets when the market looks like it's in a free fall on the downside. But when you look at it and where, the growth should be, 4 or 5 years out, I think that you're going to see that this was a great buying opportunity. Yeah,
well, looking at their chart right now, that is one ugly looking chart.
There were a lot of ugly looking charts back in March of 2020 as well.
Yeah. Well, what's going to save us, though? Fed is still tightening. It's going to keep tightening for the foreseeable future until it's forced not to, evidently, which has always come as a shock to me. I never knew if they would opt to save the economy or the currency. Now they seem to be tilting towards the currency. What doesn't a lot of what we're talking about have to do with what the Fed eventually does here?
Yeah, I mean, and the Fed could pivot. We don't know exactly what's going to happen here or how the story is going to end here. But it does look like these stocks are doing well. It's not like 2000 when a lot of these companies weren't doing well. Right now, a lot of these companies are doing very well. And ultimately, as rates go up, it looks like a lot of analysts will then say, well, the profits won't go up if rates go up. But I think in this situation that we're in here coming out of the coronavirus, things may look a little different. Every situation we're in the market, it always looks a little different. It always feels a little different. But I do think that, the bond market's not a place to be. Inflation's pretty high. And over time, stocks are the best place to be. And I think that will continue.
All right. Now, my own personal favorite, not that I own it, not that I would ever recommend it because I'm not allowed to do that. I just love to follow the stock is Tesla. And it's trading down substantially from its all-time market high of 1243. And right now it's around 735, and everything looks peachy for Tesla. I don't see competition really being a factor because they're just not able to produce the number of EVs that the market's demanding. If there's a stock with a bullish argument behind it, it's Tesla, except that it's trading at 99 times its PE. The shares.
Yeah. Yeah, and we talked about Tesla, Kerry, if you recall, even the last time we were on
Sure.
was on the show, and I told you that Tesla's one of those stocks that is a very, very risky stock. I tend to recommend stocks that are a little bit more conservative than Tesla. Anything could happen with Tesla. Most of my clients are high net worth investors, and we're not looking to take that kind of a risk. But for some, we take it for a portion of the portfolio. I think that Tesla, could still be overpriced here, in my opinion. So, we had a huge run up from 2020. And like you said, it's trading at 99 times earnings. And, there's going to be a lot of competition down the road. So I'm not too sure. Elon Musk is a bright guy, but I'm not too sure that, in this market right now, that Tesla, in my opinion, would be a buy.
Yeah, well, as a Tesla owner, and I'm somewhat biased, I admit, but I'm a car person, Tesla has no competition out there. They have imagined or potential competition. But in terms of who's producing EVs now, quality, all the features, the tech, everything else, there's no equal to Tesla now. But that doesn't mean it will remain that way in the future. We've seen dozens of companies in our lifetime, Andrew, that really were dominant in their markets and not so much anymore. I remember a little company called Xerox,
Right.
IBM, General Motors, the General, all these companies, there's a life cycle. But right now, what's interesting about Tesla that I find is that it's increasing its sales incrementally. It's in a growth phase, 50% per year, 80% per year, increased production of new vehicles into a declining market, meaning that all the legacy manufacturers are seeing their sales crash. So that could be an indication that maybe Tesla's day in that life cycle of a dominant company has not yet come.
It's possible, Kerry. It's really possible. It's just that there's a lot of stocks out there, and you're definitely paying up for Tesla. So if their growth is what it could possibly be, they could do it could do extremely well. But I just think there's some other opportunities out there. I think Tesla made a nice run, and it may continue to do very, very well. But in the market that we're in right now, I think there's other stocks out there that look very attractive.
Yes. Okay. Well, I'll buy that. Let's see. When you're looking at the market, do you buy the stocks that are most beat up, that have the best potential, or do you buy the stocks that have held up because they haven't gotten the stuffing kicked out of them yet?
Well, I think that that's a hard question to answer, but I think that there are certainly some stocks that have been punished too much that are excellent buys right now. And I think there are stocks that, in certain categories, that haven't been beat up as much. But, things can change. Like I said, things can change in the market real quick. We've seen it before. We saw, value stocks, 2 years ago, so out of favor, and now, very in favor. And growth stocks that were so in favor back 2 years ago are the ones that have gotten hit, 30, 40, 50%. So the pendulum can swing very quickly. And I think it may happen here. We're in an environment right now that, we haven't seen before. And it will be interesting to see, how this works out. But I think that, in my opinion, I see money still going into technology. I think these companies are going to do extremely well down the road. And that's where we're trending. And some of these stocks are, in my opinion, great buying opportunities.
All right. Well, I guess we know where you stand. You're an unabashed bull, and we appreciate that. We hope you are right, Andrew, but you never know. Just tell us if people want to connect with you on the web, website, Twitter. How do you connect with people?
Yeah, so we usually connect with people through our seminar programs, but we're also on the web at synergyamg.com. And feel free to visit us online, and we'll be happy to answer any questions that you have regarding our market commentary.
All right. Well, we really appreciate you coming on, Andrew. We enjoy your time on the show. We will definitely talk to you again in the near future. If you got a question for Andrew, you can always send me an email, kl@kerrylutz.com. And don't forget, sign up for your free newsletter at the website, financialsurvivalnetwork.com. Andrew, happy investing. Thanks for coming on.
Thanks, Kerry. Have a great day.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.